All right, let's now move on to the other big story that we are tracking this morning, where it's been a bit of a bloodbath in the Indian market, and this has been the case across the world. Mirroring a global trend, the Indian stock exchange is crashed this morning. The BSE Sensex was down as much as 1,240 points, or as much as 3.57% at 33,516. And the Nifty had fallen as much as 369 points, or roughly about 3.47% at 10,296 during the opening hours. Now, this is not a one-off case. It's not just the Indian markets. It's not just a ramification of what has happened in the budget, but rather a global trend that has been witnessed. The Asian indexes that have opened since morning, right from Japan, Australia, which have opened this morning, have tumbled. Markets in Japan, South Korea and Australia have dropped sharply, witnessing a correction of as much as 5 to 7% in opening trade today. The market crash mirrored massive losses that were seen in Dow Jones, which has witnessed its worst crash in over a decade. The Dow Jones Industrial Average tumbled down by a whopping 1,175 points, or almost as much as 4.6% to close at 24,345, breaking below the 25,000 level for the first time in several months. Now, Japan's Nikkei has slipped down by more than 6% as stocks across sectors have pulled back. Automakers, financials and technology names were lower in the morning. All right, and to discuss as to what is exactly happening in the market, we are joined by my colleague Sumit Chaturvedi, who joins us from the newsroom. And we're also joined by Mr. VK Sharma, who's a markets analyst from HDFC Securities. Sumit, let me start with you first. What is happening? Why have the markets reacted so strongly?
So clearly it's a fallout of Dow Jones, which has fallen in US by 1,600 points, the worst in its history. While this is also the US markets, are the losses there are triggered by two factors. First, high bond yields, and second, high inflation fears. So overall, the tumbling started from the US markets.
Right.
And thereafter, since morning, it has percolated down to US Asian markets, and thereafter Indian markets were clearly not untouched by it. So that's why Sensex closed down by over 1,100 points, and Nifty is also lost. It has lost 300 points. So that rout in the market, however, in India has been continuing since Friday, when the overall coming down of market was triggered by long-term capital gains tax that was announced in budget.
Absolutely, and you do stay on with this. Meanwhile, Mr. Sharma, you've been tracking the markets very, very closely. It's been a bit of a bloodbath this morning.
I think, let me clarify things. The market, not for a single day, has fallen since Friday on the reason of capital gains tax. It has been falling since Friday morning only on one reason of the bond yields in the US going up, and a combination of the very strong report that came in. And that strong report was the Friday jobs report, which meant that the inflation in the US could further go up with the wages hiking and 2 lakh jobs being created. That would mean that the economy will continue to heat up and the inflation would rise. And in turn, combined with the fact that in the US you do not have Ms. Yellen anymore, now she has been replaced by Mr. Powell. So, and he is an unknown commodity on the street.
Right.
And if at all, if you want to patch him up, you will rather place him in the view of where he is very hawkish. From that perspective, the Fed might raise rates faster than what Yellen had done. So these things have really made the yield go up, cross 4.88, and yesterday it was a purely computer network which was at fault in the sense that algorithmic trading happened, which made the yields go up to 4.88 in the morning during the course of the day, and the cash was generated. It was deployed in the yields to bring down the yields to around 4.72. So essentially, it is that mix which is happening, which is troubling the global markets, and India just happens to be in the midst of that. Capital gains tax would have allowed the market. If the LTC wouldn't have come, it would have probably allowed the market or investors to buy. Now, that is not the reason why people are not coming forward, is because of this reason.
No, we'll talk about the capital gains tax in just a bit, Mr. Sharma, but just to clarify this a bit further, you're saying that the reason why the global markets have crashed is essentially because of what is happening in the United States, and there are very little else that needs to be spoken about because of this, because the crash that we're looking at is almost 5%, 6% in Nikkei, almost 6% in the Australian stock exchange there, and as much as 3% in the Bombay Sensex here in India.
It is purely because of that, and it's a global risk-off that is currently happening. And essentially, obviously, the money lying in the market here in India, let's say, for instance, we can't go into the debt market. If the yields are further going to rise, you're further going to lose. The money can't go into the debt fund, money can't go into the balance funds. So the only way to put his money is in the equity funds.
Okay.
It is despite the LTCG being there. So one will have to bid its time and enter into pure equity. That is the only way going forward, because we still have 20% more tax advantage over the normal business. If you are running an ordinary business, you will have to pay 30% tax. So in LTCG, I'm paying 10% tax.
Right.
Still, I'll still have 20% more to save. So
okay.
So buying will come in, but not when the knife is falling.
Okay, and also talking about the Indian perspective now, the markets were at a high of as much as 35,000. They were at a lifetime high, and they have shown a bit of correction since Friday. Do you believe that this market will actually slide further, or will it again bounce back sometime in the near future this week?
I think when this kind of a correction happens, it is not the end of the road. What it happens is that this will be bought by the money lying in the cash accounts will now come in. Some buying will happen. The indices could further go up, and then again there could be further selling based upon, because somebody else has been asked to pay a margin, and therefore his margin, whether it is a FII operating in Japan or FII operating in India, or an Indian investor here in India. So if the cap, the margin requirement has come in the mid caps, obviously the large caps will be sold.
Right.
So there are no holy cows, and it is so such kind of a thing can produce a very short term kind of a upward correction, but that will be very limited, and ultimately I think there will be some time when we reach a bottom where we are not there as yet.
All right, Mr. Vikesh Sharma, do continue to stay on with us. Meanwhile, I'm told that we are also joined by Mr. Ajay Bagga, who is also a market expert. Mr. Ajay Bagga, what's your take on this? The Sensex is down almost by over 1,000 points. What's happening?
Yeah, it's a more global issue starting from the U.S. markets on Friday, and it has accelerated. So it's a synchronized global correction that we are seeing. We have benefited from a synchronized global up move in the markets and the huge liquidity that was there in global markets. We have been beneficiaries of that. Now the contagion has come home, and we are seeing sell-offs from Japan to Europe to US, and we are also caught in that. So we'll have to wait out and wait for this selling to abate. There is no other way because there are no buyers per se who are coming in and bottom fishing. So people are waiting to get some idea at least that where is the bottom to this correction. But going back to the fundamentals, there is no change in the global synchronized macro recovery that we are in the middle of. This year is a great year for the US economy. Japan economy is on the mend. Europe is showing gangbuster numbers in its economy.
Right.
So yesterday the composite PMI for Europe came more than 58 level, which was amongst the highest in multiple years. China is moving very strongly. Indian economy is growing. So as we go back out of the froth of the markets back to the fundamentals, we'll find the bottom that we have to wait for. It will take some time.
It'll take some time to find the bottom as to where this all pans out. But Mr. Ajay Bagga, just to, for the benefit of our viewers, do you think this is a market where people can now go into buy, considering that Sensex is corrected by as much as 1,500 points in the course of the last 3 days of trading, this morning, Monday and last Friday?
For investors with a 3-year, 5-year perspective, these are little bargain prices, but you're not at the bargain basement. Right? So we don't know how long this downturn will last. My own gut is that it's a matter of a couple of weeks at the most, and if not earlier. that the selling should abate, because the selling has been very sentiment, very technical driven. And yesterday, if you see the U.S. market, most of the day it was 700, 800 points down. In the last 1 hour, there was a accelerated selling, which looked like a flash crash, more because of machine trading, computer algos took over, and which caused that kind of a crash. So we were expecting that today, if the U.S. futures showed some amount of strength, you could say that the selling is over. But again, the Dow futures are showing 800, 900 points down today as well. So I think it makes more sense to wait out. Or if you have to allocate money, then put in about 5%. If you have, an allocation to be done, maybe 5% can be done now. Rest, I think, over the next few weeks you should do. Don't try to time.
You know, that's an interesting point that you've raised. Let me take that to Mr. VK Sharma. Mr. Sharma, you know, essentially the sentiment seems to be it is because what has happened in the US, that the stock markets across the world have seen this crash. But what do you expect will happen today when the markets open in the United States? Do you think they'll open in the green, or will this slide continue further in the US markets?
I think the futures are indicating that the markets will open in the red, and there can't be anything substantial which could change this alteration during the course of the day. So I think they should open in the negative, and thereafter if they recover, it's a different thing altogether. Ultimately, basically, it's a 31-year trend that has broken. Now, since I'm not that good a student of the US market, so I can't have a long-term view on that, but I can just say that when the economy is doing well, raising on inflation is not a concern as long as the earnings are going to rise.
Right.
So currently, people who are in the habit, who have looked at, who have lived with it, who have grown with this 31-year trend, where the yields are continuously falling since 1987. So that group may have certain views. So I don't have that, but definitely we have had an eye on that. So therefore we are saying ki hold back, your investments, don't put in your money as yet. But fundamentally speaking, if the inflation, if it can be passed on and earnings can rise despite that, I think it is not going to be a big issue in the longer run. But for the currently, till you don't actually find a bottom in place, I don't think you need to second guess the index.
Right, fair enough. And let me now go across to my colleague Sumit, who's been waiting with this very patiently. Sumit, you've tracked the markets for the last several years. Now, this is, you know, where experts are saying that the fundamentals are in place. It's essentially a blip that's been seen because of what has happened in the United States. Do you buy that argument?
Well, absolutely. The fundamentals of the strong, if it is right, definitely it's going to see all kinds of routes. That's why we have seen that in markets, the price of the stock may come down for some time, but if it has strong fundamentals, it will go up and up, as we are seeing with blue chip stocks and certain the mid-level stock as well. That's what, having said that, yes, it is a good time for buying into certain stocks as well, where the buying couldn't happen earlier because everybody was complaining the markets are at very high levels. Now they have come down and the buyings would happen. That's what my overall view is.
Absolutely, indeed. Thank you very much indeed to Sumit, to VK Sharma, and also to Ajay Baga for having joined us on this broadcast. So the markets are down even as we speak by almost 1,200 points. It now remains to be seen as to where the bottom will be found. Is it essentially a fallout of what has happened in the United States, where the markets, the Dow Jones and the other indices in the United States have crashed? Is this clearly a fallout of that, or are there other domestic factors which are also at play? Because remember, the Sensex and also the Nifty are trading at record highs. They've dropped as much as 1,500 points in the course of the last 3 days of trading, and it now remains to be seen as to where the bottom will be found before it again becomes a buyer's market. So this is what is playing out at the markets around the world. It was Dow Jones which closed at its lowest point in the last 8 years, not since the subprime lending crisis of 2008, that the markets crashed so much in the United States. And exactly the same trend was seen in the markets when they opened today in Australia, in Japan, in China, in Korea. And that's exactly what has been witnessed in Bombay as well. So when Bombay Stock Exchange opened this morning, it sharply corrected. 1,200 points is where it is trading in the red. And it now remains to be seen whether buyers will in fact come, or will this bear run still continue. Like they say about the markets, the bulls make money, the bears make money. It's all about knowing when to invest and when to get out of the market. That, of course, is the million-dollar question when it comes to trading. But this is a sharp correction that has been witnessed on the back of the developments that have taken place in the United States in terms of the rates that have been announced by the Fed within the United States. And that is the impact which is being also witnessed in the Indian stock market as well.